Wealth preservation against inflation. In the complex landscape of personal finance, a prevailing misconception propagated by banks is the notion that money in our accounts grows over time. However, a closer examination reveals a stark truth. While the numerical value of our money may increase with interest, its real value depreciates, particularly in the face of escalating inflation. Welcome to Ash Cash Stash. Don't forget to like, subscribe, and turn on the notification bell. Now, let's dive in. God's money, gold, silver, and platinum. In the realm of finance, the conventional notion attributes the value of money to its role as a store of value for the future. However, in the face of extensive government printing and economic uncertainties, financial experts are increasingly promoting the allocation of investments into assets that possess both intrinsic value and scarcity. This paradigm shift has prompted affluent individuals to diversify their portfolios by incorporating precious metals, including gold, silver, and platinum. These metals, historically proven to retain and enhance their value, emerge as a dependable hedge against the erosive effects of inflation. The strategic investment in precious metals gains credibility when examining historical data, especially in the context of gold. Over the years, gold has demonstrated a remarkable and consistent increase in value, substantiating its reputation as a long-term store of wealth. As traditional currencies face the challenges of inflationary pressures and diminishing purchase power, the enduring appeal of precious metals lies in their tangible and limited nature, offering investors a tangible and enduring means of preserving and growing their wealth. Amidst economic landscapes marked by uncertainty, precious metals provide a valuable refuge for investors seeking stability and a safeguard against the potential erosion of their financial assets. The scarcity inherent in metals like gold, silver, and platinum, coupled with their historical resilience, positions them as enduring assets capable of weathering the fluctuations of traditional monetary systems and standing the test of time as a reliable store of value. Industrial commodities, raw materials. Commodities extend their appeal beyond scarcity, finding value in their indispensable utility across diverse industries. Among these, metals such as silver, cobalt, nickel, and copper play pivotal roles in the realms of electronics, medical equipment, and energy production. The demand for these metals is driven not only by their scarcity, but also by their essential applications in advancing technology and sustaining critical sectors. For investors seeking exposure to the value inherent in these essential commodities, financial instruments offer an alternative to physical ownership. Investing in stocks of mining companies engage in the extraction of these metals, participating in mining-focused mutual funds, or exploring derivatives linked to commodity prices are viable avenues. These options enable investors to benefit from the potential appreciation of these crucial metals without grappling with the logistical challenges associated with physical possession. In essence, the investment landscape embraces the dual facets of scarcity and utility when it comes to commodities. By recognizing the integral role of certain metals in powering industries and advancing technological frontiers, investors can strategically position themselves to capitalize on the value embedded in these essential commodities, fostering a diversified and resilient investment portfolio. Before we move on to the next segment, it's time to join the Subscribe Squad. Hit that like button and stay tuned for awesome content. Safe haven currencies. In the global landscape where fiat currencies reign supreme, geopolitical stability emerges as a pivotal consideration for those seeking to preserve wealth. The Swiss franc, tethered to Switzerland's resilient economic system, stands out as a beacon of stability and is often deemed a safe haven asset during periods of geopolitical turbulence. While the privilege of opening Swiss bank accounts might not be accessible to everyone, currency exchange-traded funds or ETFs and forex brokers provide more manageable avenues for smaller investors to access and invest in stable currencies like the Swiss franc. The Swiss franc's reputation as a safe haven is rooted in Switzerland's long-standing commitment to economic prudence, political neutrality, and a robust financial system. Investors, particularly during times of uncertainty or crisis, turn to assets denominated in Swiss francs as a refuge from the volatility that may afflict other currencies. This flight to safety underscores the currency's unique status and its role in wealth preservation strategies. For smaller investors looking to incorporate the stability of Swiss franc into their portfolios, currency ETFs present an accessible option. These investment vehicles track the performance of the Swiss franc against other currencies, providing a way to gain exposure without the complexities associated with direct currency trading. Additionally, Forex brokers offer platforms for investors to engage in currency trading, allowing them to capitalize on the stability and strength of the Swiss franc. As geopolitical considerations continue to influence financial markets, the Swiss franc remains an intriguing option for those navigating the complexities of wealth preservation in an ever-changing world. Sovereign Guarantee, Government Securities or GSECs. The legal tender status of fiat currencies is backed by the full faith and credit of the government. Investing in sovereign guarantees such as the government securities aligns with the stability of the backing government. However, careful consideration of a government's global strength and credit ratings is crucial when choosing GSECs to minimize risk. Value stocks and mutual funds. Distinguishing between value and growth stocks allows investors to balance risk and return. Value stocks, backed by strong fundamentals and stable dividends, provide steady appreciation and income. For those seeking a diversified approach, dividend-focused mutual funds can offer an ideal investment vehicle with a history of stable payouts. Land and real estate. Land, considered a non-depreciating asset, is consistently in demand for residential, commercial, and industrial purposes. Investing in real estate, either through direct ownership or real estate investment trusts or REITs, serves as an effective inflation hedge. Contrary to common beliefs, gaining exposure to real estate doesn't require substantial funds, as REITs provide an affordable entry point for retail investors. Collectibles. Vintage cars, rare art pieces, luxury handbags, and limited edition items fall into the category of collectibles. These unique items often appreciate in value over time, serving as timeless repositories of wealth. Online marketplaces and platforms offering partial ownership of collectibles democratize access to average investors to participate in this asset class. Conclusion: navigating the complexities of wealth management necessitates diversification across these 6 asset classes. Each asset brings a unique set of advantages, and a well-balanced portfolio across these categories can provide a robust defense against wealth erosion caused by inflation. In adopting these strategies, individuals can pave the way to intergenerational wealth and financial resilience, ensuring a prosperous and secure financial future. Once again, this is Ash Cash Tash. If you found these insights valuable, don't forget to like, subscribe, click the notification bell, and share this video. And for more engaging content on economics, business, and personal finance.